You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. It's time to talk some ball. And man, we got some ball to talk about again this week. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging this week. Hope you're having a good week. Hope you're making some money. Hope you're at the very least keeping your head above water out there. A lot of whipping and sawing, and then the latter portion of the week we kind of saw mostly just trending. So intriguing stuff out there. A lot of vol, no matter what asset classes you're looking at out there, even though a little bit less off the top on the equity vol front. We'll get there in a second. Of course, if you want to join us for awesome pro Q&As, we had an awesome one earlier this week with our good buddy Dan, the man Grams. He tackled just about every asset class. Vol comes in all shapes and sizes, and we covered it all on the pro Q&A this week. Check it out over there on the pro. Theoptionsinsider.com/pro is the place to go to learn more about not just equity vol, metals vol, energy vol, FX, rates, you name it, crypto. We went down the rabbit hole this week. And of course, coming up after this show, we'll be diving into a little bit of options oddities. Where do you go to get all that? Theoptionsinsider.com/pro. Start getting your name in the hat as well, because we're coming up to the end of April. Man, we're just giving out crates left and right, it seems like. Already almost time to give away the April Pro Trading Crate. Trust me, you want to get at least one of these in your trading life. Theoptionsinsider.com/pro. The place to go to learn more as we learn who's joining us on the old program today. First, we go out to the hallowed halls of the Giovinazzi compound, where we are joined once again by the rocking if the lobsters, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show on yet another volatile Friday, sir.
Volatile Friday, yes, but dare we tickle the bottom of the danger zone today?
Yes.
We could very well be tickling it.
Yes, you're spoiling the lead here. Yes. I don't know. We have to keep Mr. Loggins in the green room. We just broke at 25, but we'll get there in a second. I had to pay his fee, and now we got to keep him in the green room. He's going to be really mad at me. But
I was about to say, I don't want you to get deplatformed again.
I'm going to have to eat that appearance fee now because of my damned Loggins integrity. But as we keep rolling out to the hinterlands of Chicago, where we are joined once again, a man who has no integrity, Loggins or otherwise, none other than Dr. VIX himself, Mr. Russell Rhodes from the Kelley School of Business. Mr. Dr. VIX, welcome back to the show, sir.
I'm Rock Rhodes.
Rock Rhodes.
Maybe we could combine all that up, and whenever we're on up, we could have Rocky Road Friday when we have the Rock Lobster and me on at the same time.
I'm just going to call you
I'm
Dusty.
feeling kind of salty today, and hopefully we'll have a chance to get to what I'm salty about.
Ooh, I'm just call you Dusty for the rest of the show. How about that?
Don't do that.
A little Dusty Rhodes action
no,
here.
Please don't do that.
On the show. As we keep on rolling, he is none other than the American Dream. As we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's dance a little bit of the old Vol Review, the portion of the show where we break down all the Vol trades and trends and developments that caught our eye this week and indeed today. And yeah, it's another interesting one out there, listeners. I've said it for a while now. If you don't like where these markets are or which direction they're moving in, just wait 5 minutes. Chances are it'll be markedly different. As we're coming into the end of the show, we've seen a mostly upward trajectory in the markets this week, which is a bit of a departure from previous weeks where we're up in the morning, then we're down in the afternoon, then up again in the evening, or vice versa, just whipping the sun all over the place, leading to a lot of vol on the screen. But when we're trending in one direction, it tends to take some of that vol, unless the move is pretty aggressive. Earlier this week, we saw vol actually popping a little bit off the aggressive upside move that we saw. Remember, at the end of the day, movement is vol. Doesn't matter which direction we're going in. But now that we're kind of mostly seem like we're gently drifting upward, with the exception perhaps of today, we're seeing a lot of vol come off the tape. As we're kicking off the show, I was just saying, I had the logins and his band here. They were warming up. I heard them before showtime. They sounded great. We were all ready to bring them out of the green room to have a little bit of danger zone fun here on the show, listeners. And then guess what happened right as the show started? We broke 25 in the wrong direction. 24.85 now in VIX cash as we kick off the show. Down a little over 14, about 14.15 points from our last show, which remember was 2 weeks ago. We didn't have a show last week on Good Friday because the markets were closed. So yeah, I had to send Kenny and company back to the green room. They were a little mad. I'm not going to lie. I might probably still have to pay them their appearance fee. But we'll see. Maybe we can get some logins to join us throughout the show, listeners. So if you're tuning in, especially for the logins, and I saw a bunch of folks tweeting in the beginning of the week, they were all giddy about some logins action this week. So we'll see. We'll see what we get. Again, we are nothing if we don't have our logins integrity, listeners, here on the show. Our old pal Volley, a.k.a. the At The Money Vol, a.k.a. Scott Nation's creation there. 2160 off nearly 13 points, about 12.9 points from where it was this time last week. And our old pal VIX, a.k.a. the Vol of Vol, at about a 101 as we kicked off the show. So ready to break the par strike in the wrong direction, down a whopping 64 handles from where it was 2 weeks ago here on the show. So a lot popping off in the vol space. It sounds like Mr. Dr. VIX is a little spicy today as well. So maybe we'll kick things off with him. Mr. Dr. VIX, sir, what's catching your eye? And yet another intriguing... Oh, by the way, before I even get there, really quickly, S&P right now, as we're kicking off the show, trending back up again. It was kind of hanging out mixed. Now it's up nearly 0.5%, about 0.45%. The Dow off about 0.2%, and the NASDAQ up about 0.95%. So really... bit of a mixed bag out there in the market today. All right, Mr. Rhodes, the floor is yours. Have at it, sir.
This isn't the past week, but I get to talk about the past couple of weeks, and I don't in something in the show notes that you sent out was a chart showing that we had 4 20-day or 20-point ranges in a row, April 7th, 8th, 9th, and 10th, and that's never happened before. And if you exclude the overnight data, it didn't happen then either. In fact, the only of those 4 days, the only one that the high-low range occurred during the regular trading hour was the 8th. So I get salty. I get all fired up when I see people talk about historical VIX, and this has never happened, that's never happened, and whatever we're talking about happened during the extended trading hours when there ain't a whole lot of liquidity in SPX options. And I even I haven't had enough time to get all my evidence in shape, but a while back I did a thing where I checked how often was the VIX high during the extended hours, and it was like 80% of trading days. It was ridiculous. So if you're going to make big VIX history pronouncements, make sure that you're comparing apples to apples. And I know we've had different VIX calculations in the past as well, which I think have a minor impact on some of those all-time statements people like to make. But you really don't want something like that. You don't want to disconnect. And they're telling me who it is now. I guess I'm going to have to give them a call and talk to them about it.
You are referring to some data I was going to get to a little bit later. Yes, our good buddy, Mr. VIXologist, who was on the show recently, he was on our Pro Q&A as well, and some of our chat was saying, hey, you need to do one of your, vol reviews, but for just Q1, because there was so much going on. And so he sent over some data. You're right, I noticed a couple of salient data points there that caught my eye as well. Like he mentioned, VIX ran to a high of 60.1. So you're right, he is pulling from a broader spectrum of data points than perhaps you and I might refer to here on the show. We even came in after that when people said VIX hit 60. We all said, kind of cool your jets. So that one you have to kind of read between the lines a little bit there. But I'm glad you pointed that out, sir. Anything else catching your eye on the vol front this week?
I mean, we dipped below 30 finally. We did that and we closed below 30 finally, and that tends to be an indication that that happened on the 17th. I ran some numbers on that, and it's been a good all clear signal, not for the short term, but for the long term with respect to the S&P 500. I think the win percent was about the same if you bought on the close when we crossed from above 30 to below 30, and we had a streak of 10 days or more. It was about 50-50 over 5 days, but when you go out to 3 months and 6 months, your win percentage on owning the S&P 500 after one of those events is like 80%. So the action that we got in VIX, where we the above 30 streak, which lasted for 10 days, when that came to an end, the net result has been that we're continue to trend a bit lower with VIX. And it's that's probably the first time you've heard me say anything bullish in years on this show for the stock market, but it is longer term bullish.
I know you've been aggressively short of late. Has this week's developments caused you to change any of that, sir?
I'm a lot less short than I used to be, but I'm still short. I'm small short.
I know you're piling into some
very small short.
You're piling into some small caps. Is that still the case, sir?
And I own small caps now. Yes.
Man loves himself some IWM. We go out now to the shores of Maine, where the Giovinazzi compound is holding court on some vol. Mr. Rock Lobster, sir, another volatile week in the books, or about to be. What was catching your eye?
He took the first part of the week off, post Easter, post holiday. So I missed, like on Monday I came in, and then all of a sudden we're down 3.5%. I was like, what was the latest tweet? And that's where we're going to get rid of Jay Powell because he's not lowering rates fast enough. So I think what happened was the Donald figured out about how much the market moves over various things. He's like, okay, we're just going to keep raising tariffs forever. SPX down below 5,000. We're going to fire Powell, probably lose 5% market cap easy in one day. Rates will probably skyrocket because at least he's the one guy holding the line. So you have a couple of I guess just tape bombs go off, and then volatility goes crazy. So from what I can tell, the tariff war, we got a 90-day reprieve. So we got the outset. I think it's clear. You look at it and you're like, okay, well, Trump wants to raise tariffs and make people pay for the global defense. That's kind of how I read this. The U.S. cannot afford to spend $1 trillion a year on defense anymore, basically, because discretionary spending has gone up like some astronomical amount since 2020. When they kind of broke the budget for COVID, I guess politicians just figured, well, we could spend just a little less than that and look good, even though that was literally disastrous levels of government spending. And I still think they're trying to figure out what happened. The Doge thing was looking good for a while. There was a lot of positive, let's just call it good feelings, maybe expectations. And the reality is, even when they identify things that have to go, there is very little political will to cut spending. So ultimately, the bond market, I believe, will tell the government how much they can spend, which is kind of how it works. So what does that give us? It gives us where we've pushed stocks down enough. We're still down around 10%. Yeah, I guess around down 10% from the top, from the peak. But as far as like these big policy initiatives, there will definitely be some kind of tariffs, maybe 10% across the board tariffs. Heck, Trump could call it whatever he is. We're going to charge you guys. We're helping keep world peace. You all got to pay, because apparently he probably went around shaking the cup in the fall or in his last administration, and nobody wants to pay for the goodie that they've been getting for all these years. So, and nobody else wanted to make the world do it. The last administration didn't want to either. And prior ones, all the way, for the last 75 years. So, Pete, you can agree or disagree whether that's a good idea or not. Who knows? I don't know if it's a good idea. But it does appear, at least for right now, that the trade war has kind of reached a peak, and we could be going back and forth. But I mean, the reality is we're not trading below 5,000 anymore. We're up 10% from the bottom. And I think the biggest deal is a lot of the Mag 7 stocks really haven't gotten close to recovering from their highs. So let's just call it a lot of the cream of the value came off the top. I think the stocks were pretty expensive, by whatever metric you want to use. I mean, Google now is probably trading at a multiple that's in the teens, I believe. It's been a while, and historically, that's usually a pretty good place to buy Google. I just want to see, like according to LiveVol, it's trading at a 17 PE and 18 PE. And that's before you take out the cash per share. So things are getting back to more reasonable valuations. And can they cut spending? I don't hold. I think both parties have become totally useless on the topic now. I would like to be pleasantly surprised, but that as a cloud still remains. But as far as like peak for VIX, I think VIX has peaked, and like at this point, I'm going to be surprised if we see over 30, at least for this VIX cycle. I don't see how we're going to get above 30, I'll say 35. I don't see how we get above 35 again. Unless, I don't know, China's not going to stop exporting to the US, unless they invade Taiwan, but I don't think they're going to do that anytime soon. So I think these tariffs are going to fly at some price. They're going to generate some kind of revenue, and the world's going to basically accept it. So, and I think that's what we've got. If there's no deals, there's going to be tariffs, and people will just have to move along from that spot. But at least for right now, it doesn't appear that things are getting worse. There's still that high level of, the amount of noise though is crazy still, but ultimately, VIX is trading 25. I don't know if traders have the courage to let it drop to the floor before the weekend, because there's always a weekend. Like last weekend, there was some pretty good corkers going on. But at least at this point, we have it does feel like we have a short-term bottom kind of happened. The markets got shaken up a little bit, and now we're looking to figure out how to fix the damage.
Yes, the damage indeed. And you know what? Our good buddy, Mr. VIXologist, was on the show a few weeks ago. He's heading out to, I believe, his daughter's wedding this week. So congratulations to him. But he still was kind enough to take the time to crunch some data for us here on the show, which Dr. VIX has proceeded to rip apart. But, nonetheless, we shall discuss some of it here because he took the time. And it is interesting. A lot of you like to see where we stand historically in these somewhat unprecedented times out there. He points out a couple of things in this tariff tantrum of vol that he wanted to share on the show today. He mentions that range from February 25th, VIX was 17.15. He says it ran to a high of 60.13 on March 7th. Again, we can dispute that upper band that it hit that day, but at the end of the day, it was still a big move. He puts it out as more than 40 points in 9 days. That's only happened twice in the history of VIX, last August in the big meltdown, and during the COVID crash. Interestingly enough, the thing that caught my eye didn't happen back in 2008 during the global financial crisis. So read into that what you will. We also had on April 9th that 90-day pause tweet sent VIX cash. Again, this is the cash we're talking about here, to its largest one-day drop in history, 19 points. And for all of you out there who can handle percent of percent, 36% out there. We'll skip the daily range above 20 points. I know that's a disputed data point out there. Interestingly enough, though, whether you dispute that or not, he also mentions the only higher 4-day total for moves here. He points out the 4 days he mentions here, April 7th to April 10th, had a range of about 89 points. Only group, I should say, of 4 days that exceeded that were 2 days, actually, during the great financial crisis back in 2008. With 1 day, we had a range of more than 40 points. Actually, so I take it back. The only time we had a higher total was in 2008 with a 2-day period in 2008. So again, we're in somewhat unprecedented territory here from a vol perspective, moving up and moving down. He also mentions last August vol spike. Since then, we've seen 9 days with 3 standard deviation daily changes up and down in vol. He measures that, I should point out, using the constant maturity VIX futures. He has a great chart. I'm sure if you check out Jim's Substack, he has these visuals there as well. I encourage you to check out this chart of the VIX 30 constant maturity futures. It shows you all the different standard deviation moves. There are 9 of them here on this chart. Interestingly, well, you could probably intuit this if you've been watching the market for a little bit now, but the day-to-day vol of the S&P 500, a lot of different ways you can measure that. He measures it as the average true range represented as a percent of SPX price. That's also historically high levels right now. Below 1.5% generally coincides with a bullish environment. Above 1.5% tends to coincide with some market corrections. Levels above 3.5% are fairly rare, and guess what we hit just this past week, listeners? Yep, 3.5%. So we're in some serious vol. Obviously, it's coming off right now, but historically, we are in some very rarefied air, which again, more data points to back up what we've been saying on this show for a while. Be judicious out there. He also points out a couple of other interpretations of this data. He says the eruption of vol that began last August is not, he puts in all caps, not characteristic of a bull market. And he talks about people, pundits, saying the move from VIX going above 50 and then back below 30 has been followed by large positive returns for the market. The problem with that analysis is there's really no sample size. It's only happened 3 times. The global financial crisis, COVID, and now. So it's kind of hard to really read the tea leaves on that one. And he puts out here, as he's talking to his clients over there at Ballast Rock, that they expect very long-term equity market returns to be attractive, but he also expects that the recent earthquake, as he puts it, of vol, will result in 1 or 2 more significant aftershocks. So interesting stuff there. Check out Jim's Substack if you want to see all the data. Again, very nice of him to crunch that data for us here even if he couldn't be on the show to discuss it himself. Let's keep rolling out to the land of the vol surface. Since we last talked here on the show, April has rolled off the board. May has slotted into the pole position. And also, we're starting to see pretty much the death of that juicy backwardation we've been living in for a while. Right now, we're still a little bit backward, but nowhere near as wild as it has been. May, since our last show, down over 6 points, 6.05 points to be precise. And June, down a little over 4, about 4.2 points out there. And looking at the term structure right now, looks like the highest we get is actually, because we are still backward, in that May future, nearly a 24, about a 23.90. If we go all the way out to December or January of next year, you got about a 22 even out there. So an interesting term structure out there. Mr. Rhodes, if you have any other thoughts on Jim's data, feel free to share them. And then what are your thoughts on how the term structure is shaping up right now?
S&P versus VIX relative stuff that he does. I find that very, very interesting. So I'm gonna give him a positive on that one. And I'm gonna, I 5 minutes before the program, I saw those charts, so I started taking a look at recent. Just the recent data with respect to high-low close and adjusting it for regular trading days and just for the regular session in the U.S. I'm gonna ship my version of that data over to him so he can have that to use in the future. And admittedly, it is kind of a pain in the butt to put those numbers together. With respect to the vol surface, flatness is uncertainty. I think. We are getting more and more of a somewhat of an all clear signal from the financial markets, but I did just see a headline that said Trump said he's going to start announcing what our tariff deals are over the next 3 to 4 weeks. I don't know if we sit here on edge with kind of a flat term structure until we actually get the clarity. Does that mean that, and I know what the answer to this question is, and it's almost a silly question, but does that mean that we're not going to hear anything that might affect the markets over the next 3 to 4 weeks until we start getting those announcements? I would say absolutely not. It may be kind of interesting after all the world leaders are together at the Pope's funeral if some things come out of that. You never know what might happen after some face-to-face meetings. So, although apparently they're putting Trump on the back row relative to other world leaders, so maybe he won't have a chance to talk to anybody about it.
It's all in the symbolism. Mr. Rock Lobster, same question for you, sir. Do you have any thoughts you want to share about Jim's historical VIX data? Have at it. And then B, what's catching your eye out there in a little bit calmer vol surface since the last time we got together on the show?
Yeah, I mean, I know Jim's VIX data, but there's like the pre-VIX, like was the 90s, like what did VXO get to in the Russian debt crisis? Remember like 70, 97, 98. So I think in the 90s you had a couple of vol spikes there. I think VXO got into the 50s back then. I don't know if Russell can look, but pre-VIX days.
No, the all-time high on VXO is 150.
Right, but that was
and that was in '87. I know, and that was a crash.
But in '97 and there's '97 and '98, both those years we had a couple you remember when long-term capital collapsed.
Yeah.
There, I could swear. I mean, again, I wasn't trading. There was no VIX then, but I could tell you volatility was sky freaking high. And that was, we still had 3 years of a bull market left after that. So, I mean, there can be things that make volatility go up in a bull market. But anyway, so I would look at grab the VXO data. Maybe you could do a rebuttal piece to that. Russell.
That's
grabbing some of the highs in the 90s using VXO.
I'm digging through my old SIBO information where I have all the old VXO data, and I'll see what I can come up with.
So, and that's even in because VIX kind of came around in 2000 and When did the first VIX future appear?
Well,
Russell?
the futures 2004, the options in 2006.
Okay,
right?
yeah. So
Yeah.
I mean, even like you didn't even have there was definitely
was no
some
tradable.
volatility in the 90s and obviously in the 80s. So we had a couple of pretty good bull markets going. Anyway, that's all I would say there on that score is that I think it could happen. So what's going on now is, again, there's a wrestle to get interest rates down, to slow things down. And again, I don't know if this is the right plan or this is a plan that's going to work. But that's what's currently being bandied about at this point. So we'll see how it goes. As far as the term structure goes, it has flattened up a lot. Let's see here. And I'm just looking now. Yeah, I mean, we are now, we're 2 points back to front, and VIX is just above 25. So it doesn't want to quite give it up here at the end of the day. But I will say, though, 9-day VIX is now running, let's see here, 25.50. So this is the closest the two have been. And I like that as an indicator. This is the closest they've been in 3 weeks since that fateful April 3rd day. What is it? Independence Day or Freedom Day, or what did he call it? Whatever day that was invoked. And generally, when VVIX dips below, or 9-day volatility dips below VIX or gets very close, you want to put your bullish hat on, and you want to put your short vol hat on, and lean that way pretty hard. But what do I know? I've just been watching these dumb indicators for the last 4 or 5 years. Once I discovered them, they're pretty cool. So it would not surprise me to see, to see that it's not like we have to head back up to 6,000 anytime soon. It's just that volatility just, slowly goes down when the market kind of goes nowhere. It can certainly happen. So just be mindful of that fact. But I think a lot of puts now, 20 puts, 21 puts, 22 puts, all those kind of puts have a new level of value. I think one of Russell's own stats is 18 VIX is kind of, I think the market spends half the time above 18 and half the time below 18. So we've been spending a lot of time above 18 this year. Say it could happen that we could spend a little time below 18. It could happen. So that gravitational pull is hard toward the middle.
It is not possible.
That's where we find ourselves right now.
You can't be below 18. It's not physically possible for VIX, sir. Can't do it. People were trading. We just talked about last week on the show, or 2 weeks ago, 16 puts for 12 cents in June. So that seemed like a Herculean move. Not quite as Herculean right now as we're looking at vol out there. Listen, speaking of looking at vol, let's do that right now. Let's go look at the mothership that is VIX Options. Is it lighting it up heading into the weekend? The answer is nah. The ADV is still 1.1 million. That's pretty much unched from where it was 2 weeks ago. So no big change there. We have been rocking and rolling enough to maintain that ADV. Even if today's looking somewhat light, 409,000 contracts on the tape. We'll break all that down in a second. But before we do that, let's go out to our proprietary TM VIX Top 10 indicator. What's it showing us right now, listeners? Well, if you're all jazzed about 4 puts in the top 10, then you're a happy camper out there, listeners. All right, to number 10, listeners, what does it cost us these days? What does it cost us to break into the top 10 out here in VIX land? Cost you a juicy, well, not that juicy really, fairly light actually, by way of comparison, 162,000 contracts. That's what it cost you, listeners, to break into the top 10. That gets us to our old pal, the June pars. June pars, did you have that on your bingo card, listeners? The June 100 calls here in VIX. Number 10. Number 9, 163 for the May doubles. Man, we're all over the place. June pars, May doubles. Nearly 50 handle range just in the first two contracts here. May doubles, 163, number 9. Number 8, 178 of the May 20s. Now you're talking 80 handles. A lot of living being done just in the bottom 3 of our top 10. Number 7, the first of our 4 Waldo contestants this week. 181 for the June 16 puts. What I was just talking about. They traded for 12 cents. Did you buy some of those? We were talking about those. I think it was actually last week we did a flash poll about that. Number 6, 185 of the May 18 puts. Maybe you like that one better. Number 5, 197 of the May 35s. Number 4, 211 of the May 20 puts. Probably, if you got to pick one, obviously it's probably one of the better strikes on the board here, especially when you compare it to number 3, 218 of the May 17 puts. I guarantee you, if you like the 17s, you got to love the 20 puts. Number 2, we're back at it. 243 of the May 75s. We're going to come back to the May 75s in a second, listeners. And then number 1, 427 of the AUG 42 halves. That is your big dog in the VIX yard right now, listeners. But you know what? They don't get much bigger than Dr. VIX, and it's time to explore his yard, known around town as Russell's Weekly Rundown.
Now, Russell's Weekly Rundown. Now, Russell's Weekly Rundown.
All right. Well, it was a quiet week. It was a very quiet week, actually. I've only got a couple of trades to talk about, which is good because I think we're kind of running behind anyway. So Monday, VIX was at 33 and a quarter. Somebody sold 1,500 of the April 23rd 21 calls for 1174. And bought 1,500 of the April 23rd 22 calls for 1076. That is net income of 98 cents for a trade that would pay off. If we're kind of where we are at expiration. However, and it doesn't matter where we're at expiration because that was an exiting trade. In the entry trade was on April 3rd, which was, I think we should call it Tarifageddon. How's that? Something like that.
Just rolls off the tongue,
kind of like the Volmageddon. But they entered this trade. They got 98 cents to get out of it. If they'd held it to expiration, they'd have gotten $1. Maybe they were concerned about a quick dip in VIX, but that didn't happen. But they're exiting a trade where they bought the 21 calls for $3.95 and sold the 22 calls for $3.40 and paid 55 cents. So nice trade there, actually, where VIX was spiking up and they got into a trade that would pay out as long as we were stayed above 22. They probably figured the spike was going to last for a few weeks from the beginning of the tariff announcements. When they put that trade on, spot VIX was around 28, and the April 23rd future was around 26. So VIX is actually at a higher level than when they put that trade on when they exited it on Monday, and then yesterday. Somebody put, and this one's kind of interesting, but you were talking about the 16 strike. This is an entry trade because the open interest wasn't there, and somebody sold 100 of the April 30th 15 calls for 1170 and bought 100 of the April 30th 16 calls for 1074. They took in a credit of 96 cents. In order to make money off this trade, they need, if they hold it to settlement, they need VIX settlement to be below 1596. I know the way I can make sure that doesn't happen is I could do a really low guess for the crystal ball, just to ruin this trade for them. But I just don't see. I don't see how someone would expect VIX to run down to the mid-teens that quickly. Are we going to get world peace and everything else early next week? I just don't think so.
But we are going to get, listeners, because We just crossed that magical threshold yet again. So they are beating down the door of the green room. They want to come out. North of 25, listeners, it is time to welcome back on our old pal, the Loggins, for a little bit of the danger zone. Let's see how he's cooking. Oh, there he is. All right. He was already playing. He wanted us to get our money's worth. He said, you paid to fly me out here. You getting a little danger zone. There you go. Everybody who was all excited. I think even our buddy VIXologist was all fired up about it earlier this week. So people tune in for the Loggins. We get it. So there you go. A little bit of a flavor for you, listeners, as we break down the vol action, such as it is in VIX land this week, listeners. Today, not exactly that spicy. As we said, 409,000 contracts. The big dog out there today, 83,000 of the May 75s. Remember I said we're coming back to that strike. They traded all in one block. 83,464 of the May 75 calls, listeners, for a whopping 16 cents. Now, those of you out there who have a little bit longer memories will probably realize that's probably the unwind of a good chunk of that mega stupid we first started talking about a couple of months ago. I think it was March 4th and 5th when they started piling in to this size May upside. It was that 5-6 leg VIX stupid. Our buddy Mr. Flowmaster has been tracking it. They put it on. It was like they were slowly unwinding it a bit, started taking some off earlier actually right around tax day. They started taking some off, it seems like, on these 75s, and taking some off, it looks like, again today. So we put it out to you folks just for fun, because it's kind of a quiet day. May 75, 16 cents. At that price, are you a buyer or a seller? Our audience, 2/3 of you, almost 61.5% say you want to buy them. 38.5% say you want to sell them. I get it. It's kind of hard just to sell naked options out there, but for what it's worth, our folks still want to buy those bad boys. Are you down for those, listeners? Number 2 today, 30,000 of the May 19 half puts. So we fall off a cliff quite a bit, listeners. Let's get out to Thursday's flow, shall we, listeners? And 418,000 on the tape yesterday as well. So not a banger day yesterday either. The big dog, 30K of the May 35s out there, followed by number 2, 17,000 of the May 45s. And just for fun, 14,000 of the May 65. So we got some funk going on there in May. Yesterday, Wednesday, 684 on the tape, so a little bit more active. The big dog on Wednesday, 59,000 of the May 25 calls, listeners, followed by number 2, 40, almost 41,000 of the May 90s. Worth noting, those were closing. They may have been part of the super stupid as well. I'll have to go check, but there was a whole mess of May upside in that trade. Nonetheless, taking off about 41,000 of the May 90s out there on Wednesday. Tuesday, 656 on the tape. The big dog, 39,000 of the May 40s, followed by number 2, 34,000 of the May 21 puts. I'm kind of just rolling through these, listeners, because we are kind of coming up against it already. And Monday, listeners, 573. So overall, not the most active of weeks out there on the VIX options front. You might expect after a week like this, the ADV to start coming in. We'll see if that happens next week. 573 on the tape on Monday. The big dog, such as it was on Monday, 35,000 of the June 42 halves, listeners, followed by number 2, 32,000 of the June 50s, 5 O's. Let's get on out now to the land of inverse vol SVIX. Been an interesting product to watch and to trade and to have in your back pocket for a rainy day. And a lot of our listeners on the pro side were buying it, or they were selling puts to get into it. I think most of you probably got put, in which case you're probably happy right now, because SVIX 12.25, up about 1.5 points out there, listeners. So again, a good little do, especially if you were selling some puts to get in, listeners, because you got paid to get in, and now you're rallying out there. So you can't be too mad at that. 13,000 contracts on the tape today. The ADV, though, climbing up a bit, up to 34,000. That's good to see. We were getting down to 10,000 or below, and that's kind of unsustainable. So good to see that the options flow is getting out there. If you're wondering what is the big dog position in SVIX right now, it's about 13,000 of the May 15 calls, which doesn't seem like that bad of a level right now. Let's look really quickly, see if we can pull it up, listeners. SVIX, just to see when they started opening some of these bad boys and at what price. Looks like they started putting them on April 7th when the spot was 13.25. These options were trading for around $1.74. So they got in a little early. They're kind of wearing it probably on those right now. But, you know, in time, they might see SVIX tick back up out there. And of course, Mr. Dr. VIX's favorite, V-Yield, 2320 up 1.3 points here or I should say in the last 2 weeks since our last show. All right, Mr. Dr. VIX, let's talk a little inverse vol. What's catching your eye, an SVIX or your newly beloved V-Yield?
Nothing terribly exciting is happening in either of them. I'm feeling more comfortable owning both of them since we're getting a flattening of the term structure. You know, the inversion has not done any favors for my girl SVIX, and I've just kind of been sticking it out with a small position for right now, waiting for it to get back on track. I might sell some puts if we get any sort of dip in it once again, if we get another volatility event. But for right now, I'm very status quo across the board and have very little exposure because I'm not sure what's next right now. I know that's not very helpful, but I'm just not sure what's next right now.
Yeah, this V-Yield, it's been hard to get too jazzed up about it. I mean, we've had some of the most active, most volatile markets any of us have ever seen, and V-Yield not exactly lighting the world on fire to the upside or to the downside, which I guess is part of the point. But if you come into a muted product, again, that kind of gets into the UVXY versus UVIX debate all over again. Yeah, about a month ago it was 25 1/3. It dipped down to 21.46 on April 8th, and it's been kind of slowly climbing its way back to 23.20 right now. So not the most scintillating of products, but maybe if that excites you, maybe V-Yield is your huckleberry. Mr. Rocklops, anything catching your eye in the world of inverse vol?
It appears that it has stopped going down. But how long is just SVIX was just $24. I feel like it was a month ago. So it is a long slog to get back to that level. Yes, on March 25th, it was $24. Now, even if VIX goes back to 14, SVIX will not get, it will take forever to get back up there, probably 4 months. It tends to go up a lot slower than it goes down. Kind of like probably do better. I think you'd probably do better shorting VXX right now than being long SVIX from a performance point of view. Although, you could probably, let's see, if you short one VXX and buy 5 SVIX, it might work. It will start performing better once the curve, at least the flat curve, is not so disastrous for it. But it is pecking away today. Even though Donald just said he ain't dropping any Chinese tariffs unless they give him something. So anyway, the news feed bomb war continues.
I was going to send Kenny and his team back to the green room, but our chat just pointed out this might be our last Loggins appearance for the year, or at least quite some time. So if that's the case, we got to let him have one more run. So go ahead. Kenny and company, you can accompany us through UVIX, 45.5, down 27.3 points since our last show 2 weeks ago. I know for a lot of you, though, you were setting up on the 40 strike and below and stuff, so even that massive move was not enough to get you there, certainly by April expiration. I know some of you were feeling that pain. It's a hard beast to time UVIX. I get it. So, yeah, it looks like I looked at the OI. A lot of money went to die on that UVIX downside, and it was not cheap out there at the end of the day. Today, not lighting the world on fire, 13,000 contracts. But then again, look at the ADV. It's only 17,000. So from that perspective, it's actually decently active. Let's throw UVXY on there as well, because why not, coming up against it. UVXY down at a 30 even as of right now, I should say, down to over 11, about 11.1 points from where it was this time last week. 81,000 contracts on the tape. The ADV 130, down about 8,000 out there. And if you're wondering what the big dog position is out there in UVXY, it's the June 34s, 14,000 of those bad boys. And in UVIX, it is the one puts, 5,800 of those. I think those are pre-reverse split back to the old days when we were trading 3.5, 3.25 listeners. Mr. Rose, anything catching your eye in UVIX or UVXY? And we can throw VXX in there if you want as well. VXX was at a 65, down 14 points a little while ago. I'm sure if I re-rack that right now, it might be a little bit lower. Only 16,000 contracts on the tape today, though, so it needs to get its butt in gear from an overall volume. We'll see if it's done any better. It's done a little bit better since we first racked it at the beginning of the show. Now it's up to 43,000. That's a little bit more respectable out there. Mr. Rhodes, anything catching your eye in UVIX or UVXY or VXX, sir?
I've continued to do my UVIX thing and been, okay, happy with it. I got to update, and what I do for those if there's anybody new listening, I typically buy UVIX on Friday afternoons and sell it first thing on Monday mornings, hoping for some weekend volatility. And even looking at VXX, which has a lot more history to work with, it looks like this is a strategy that does well if you just stick with it over time. When I find those things, I'll trade them for a while, and then I'll go back and I'll do the back test and make sure the back test is matching up. Every time I've done that, the back test is matched up fairly well with my executions, as long as I'm not getting cute execution-wise. So I got to share where we are with that and an update on that in the near future.
You'll be happy to know I was doing options boot camp yesterday with our buddy, Mr. Passarello, and we both hit upon independently that your little secret weekend UVIX trade is really the only legitimate use case we've ever seen for a market on close order. Both of us. I've never understood the existence, the point of that order type until I stumbled across that use case. And I was like, oh, this actually makes sense for a market on close, or preferably a limit on close. But still, I thought that was kind of funny, Mr. Doc. So you were invoked yesterday on options boot camp.
That. And in a positive way, unlike me beating up on somebody.
You're right. You're right.
Just one of my running jokes, and it's not a good joke anymore. Used to be the only reason you would want to own one of those ETFs is if you knew the day before that Putin was going to invade a neighbor. Used to use that on a running basis like a decade ago. Now you can't use it anymore.
Can't really use that one anymore.
No, you can't.
No, sir. As we keep on rolling, and we time to dive into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. And of course, our last show was 2 weeks ago out here, listeners. So the 17th was the day we were guessing for, which VIX closed at a 29.65. Which the meatball wasn't that far away, 31.13. It was myself, it was the meatball, it was Dr. Vix, and it was Mike Deaver and from Brandywine. He was at a 27. Russell was at a 25.69. I was at a 33.29. So the meatball was the closest, but no cigar. And as of right now, listeners, coming into the end of the show, where are we hanging out? 26.48. Oh, getting a little bit of spice back. I guess that's what you're talking about with Trump spooking people again, getting a little bit of juice back out here in the vol space. But Mr. Rock Lobster, since your compatriot was the closest, you got the fun of going first. What are you feeling for this time next week, sir?
I'm going to say next week, 22-22.
Interesting out there. Also interesting as it seems like the whatever green we had on the screen is kind of going the way of the dodo. It's like Trump, as he is wont to do with the tweet, spooking people. And Mr. Rock Lobster, if folks want more Rock Lobster goodness, where should they go? What should they do?
Yeah, go to optionpit.com, click on any of my products, and earn while you learn. Learn how to trade options. It's possible if people teach you how to trade, put your trades on when you have some volatility edge, when you have a little bit more positive carry, and you have positive carry, positive curvature. It's a great thing to learn how to do. Give it a try. Optionpit.com.
Check them out, optionpit.com. I was the next closest, so I shall go next. I'm feeling, I don't know, things might get a little bit spicy. We were at 25 a few minutes ago, then about 26.5 right now. I think we might be able to add on about another point on our show next week, I should say. Maybe another tweet comes out right as we're doing the show. I'm going to say 27.49 for this time next week. So we got over about 5.25 point range. Mr. Rhodes, are you going in the middle? Or are you going somewhere way outside?
I'm going to be completely honest. I was going to do 22-26.
He scummed you.
And somebody beat me to that. So I'm going to do 25.69.
Oh, that's a big change. There you go.
I'll go in the middle then.
25.69 for Dr. VIX. What is your prognostication, listeners? Send it in to us today via social media or questions at theoptionsinsider.com if you follow us on any of those platforms. If you're hanging out in the live chat, get it in there. We got some 23 handle, a 19 handle from the Queen, 1947. A interesting year. Is it a good vol? Can we break a 20 handle by this time next week? That would be wild. Get your VXX shorts and other vol fades in if that is the case. 25.7. We're all over the place, which makes it fun, listeners. If you're in the live chat, obviously get your prognostications in as well. If you come close, you too can win fabulous prizes. We're just giving prizes away left, right, and center. And Mr. Rhodes, if folks want to check you out over there on the Substack, where should they go? What should they do?
But the Substack's my name. I'm just not a marketing person at all. The Substack's, under my name, russellrhodes.substack.com. The place to really find anything that I'm ever doing is my Twitter, which is at my full name, Russell Rhodes, RHOADS.
There you go. Full name, 2 S's, 2 L's, RHOADS. And since he sent in such great data that Russell promptly tore apart, let's give a plug for our good buddy, Mr. VIXologist as well. Find him over there on the old Twitters, at VIXologist, all one word. I don't have the link or the name of his Substack, or I would plug it out there as well. But check him out over there on the VIX. He's always tweeting great stuff out there. And that's going to do it for us here on the on-demand side. If you're listening on the podcast front, that will conclude your broadcast week with us. I want to thank you for joining us in this very tumultuous week. If you're hanging out in the pro, stay tuned. I'll be coming back instantaneously. No wait for you folks. No rest for me. Right into the oddities madness, listeners. Should be a fun time, so stay tuned for that. If you want to check out what we're talking about, theoptionsinsider.com/pro is the place to go to learn more. Come back on Monday. We'll see if the Rock Lobster can continue his trivia victory streak or if Uncle Mike can battle back on the option block on Monday all the way through to next Friday. Another episode, Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.